Thank you for joining us. And now we'll be speaking about taxes. Together with me, I have a panel of esteemed tax practitioners. Stephen Hignett from CMS in London, Cesare Silvani from Maisto Associati in Milan, Stephen Heijting from Taxperience in the Netherlands, and Marinos from Marinou in Cyprus. Okay, so let's speak about taxes and what's happening in the tax world, particularly in relation to gaming companies. So, as most of you are aware, gaming companies have been in Malta for a long time. In the recent years, we've seen gaming companies not only relying on the MGA license, but they started looking at other licensing since the licensing regime came into Europe, particularly. And today we have B2C operators, but also B2B operators who face the UK, so a very well licensed, known license in the UK, Italy, and Netherlands, as well as other countries, but today we'll be focusing on this. And there are also Maltese B2C operators and B2B operators that use other jurisdictions, such as, for example, Cyprus, in their structures. And the aim of this panel is to bring you up to date of what has been happening in the tax world. So we've seen COVID, and then possibly a recession, possibly a change of mindset in the tax authorities. So we're seeing more tax legislation, more harmonized tax legislation to combat tax fraud and evasion. And the scope of this panel is to walk you through what these particular jurisdictions are doing and for you to keep an eye and be aware of what's happening from a tax point of view in each of these jurisdictions. So I'll start with Stephen first, from CMS in London. Stephen, what are the updates and what do our clients need to keep in mind when it comes to taxes and the UK? So a Malta company facing the UK, are there risks of permanent establishments? Are there any other new tax laws coming in? We know that there is OREP, a new taxation on IP. What should our clients be aware of?
Thank you, Ramona. I guess the big news in the UK is actually what's about to happen on Thursday. As I'm sure most people are aware, we've got a new Prime Minister, we've got our fourth Chancellor, and we got a new budget on Thursday, and the last one was cataclysmically bad. And so the poor Chancellor at the moment has a 40 billion fiscal hole to fill up, and what that means in practice is that taxes are going up. So I think, having not gone up for some time, I think UK gambling taxes, and of course that's UK gambling duties are levied on a point of consumption basis. So if you've got a Malta operator facing the UK, obviously you've got to pay the duty in the UK. So I think those rates may well go up. At the moment, you've got remote gaming duty at 21%, and the two types of betting duty at 15%. So that's one to keep an eye on. There's a lot of talk about digital services taxes. That's been discussed by the OECD for a number of years now. And there's the debate as to whether or not Pillar 1 might come in the next year or two. But the UK already has a digital services tax. It's targeted very much at the very largest companies that have global annual revenues of 500 million. And then if you have UK digital revenues of over 25 million, you pay a tax at 2% over that. Now, that catches only the biggest players, but the news there is that last year the government in the UK said that if there is an international consensus on this, we're still going to keep our domestic taxes. And so what you might see is actually those thresholds coming down and maybe the rates going up again because they need to raise revenues. So that's one.
Can I ask you a question on this? So digital tax, we know that there is a movement to have it harmonized. But in the meantime, countries have gone ahead and they have their own digital taxes. In the UK's case, is it in the form of a direct tax, an indirect tax?
It's an indirect tax, and it's designed to ensure that, and it was very much, aimed at Google, Facebook, and the really big US tech companies. It's something that's not going to help. A treaty isn't going to help you.
Exactly.
It's an indirect tax that's going to be an absolute cost.
So if it's an indirect tax, what we're saying, so we have double taxation treaties. covering mostly direct taxation. But if it's a digital tax in the form of an indirect taxation, then there isn't any offsetting of double taxation.
No, the point of it was that there was those big tech companies don't have a physical footprint in the UK. And so this is part of a range of new taxes that are being thought about to try and tax people based on where their consumers are, as opposed to where their operations are based. So yeah, very much a cost to the company. The last one to mention is the one you mentioned earlier, is OREP, which stands for Offshore Receipts in Relation to Intangible Property. This is a nasty UK extraterritorial tax. I'll give you an example of when it can apply. So if you've got a Maltese B2C operator with UK players, if that Maltese operator has got a group company that is in a tax haven that holds IP, and it pays a revenue to that offshore company for the use of that IP, if that company is in a tax haven, which means it either doesn't have a treaty with the UK or it has the wrong sort of treaty, then there's a tax liability for the IP company on the revenues that it receives at 20%. So Malta is not a tax haven for those purposes, but Gibraltar, for example, is a tax haven because it doesn't have the right sort of treaty. It does have a treaty, so you can then sometimes get out of it a different way. But because it's an extraterritorial tax, we see a lot of clients who haven't spotted this, and it sort of comes up in due diligence when you've got sale processes.
Okay, and how is it collected? So if there is, let's say, an IP company outside of the EU, then how is it collected in the UK?
That's a really good question. I mean, it is owed to the UK government. If there isn't any physical presence in the UK, then that causes some issues. But obviously there are intergovernmental agreements around tax collection, etc. So there are ways and means that the government find a way of collecting the tax.
Okay, so the takeaway point is that the important thing is that the IP, when it's UK facing, it's in a jurisdiction which has a double taxation treaty with the UK. Example, Malta. So Cesare now, Italy. So Italy, the licensing regime in Italy, now we're seeing more and more companies with a license in Italy. What's happening? We know that there were a lot of case law in terms of permanent establishment. Permanent establishment is a tax concept which gives the right to tax a jurisdiction. So a Malta company, which is incorporated in Malta, is subject to tax in Malta, but another company, another jurisdiction, another country might have the right to taxation. And this is when a permanent establishment is established. What's happening in Italy? We know that there were lots of discussions and a number of case law on this in Italy.
Yeah. Permanent establishment is an evergreen problem in Italy, so it's something that is always on the table when you speak about foreign companies doing business in our country. There has been quite significant litigation for gambling companies doing business in Italy without a branch. So basically, what you have to keep in mind when you operate in the Italian market is, where are your servers first? Do you have people on the grounds? And also, what's your relationship with the data transmission centers in the country? And then you have to basically analyze all the facts and circumstances of your business case in the country. We do have two very important landmark cases for gambling companies and PEs in Italy. One of 2014, where the tax authorities even alleged that a Maltese company was resident of Italy just because the main market of the company was Italy. So just because the company had a license from the Italian government, they said, your main business purpose is in the country, therefore you should pay taxes in Italy. That company successfully challenged the claim in court, and the Supreme Court basically said that you should look at where the servers and where the online platform is managed. In that case, it was managed from Malta. This is 2014. Then an even more important case involved StallyBet. In that case was StallyBet UK doing business in Italy. And the claim of the tax authorities was that there were Italian managers doing business on the ground. And also there was a constant relationship between the Italian data transmission centers and StallyBet UK. Therefore, the Italian tax authorities said, you have a taxable presence here, you should pay corporate tax, regional trade tax, and VAT to Italy. Also in that case, the taxpayer went to court, and the Supreme Court sided with the taxpayer, basically saying that all those activities that were highlighted by the tax authorities were just auxiliary and preparatory activities. So again, the Supreme Court focused on where the management of the online platform was taking place. And again, also in that case, the online platform was managed outside of the country. But this is not the end of the story, because the government reacted to the decision. I mean, Italy, as you may know, is not a country where there is the binding precedent principle. So the government basically changed the law after the decision and enacted a very special rule, which is targeted to gambling companies. And the rule basically reverses the burden of proof. If you are within the scope of the rule, it's the taxpayer that has to prove that it does not have a taxable presence in Italy. It's not the tax authorities who should prove that you have a taxable presence in Italy. And the rule is quite simple. It basically kicks in if in any 6-month period, the foreign company makes payments for managing bets or collecting bets to Italian data transmission centers in excess of 500,000 euro. So if you are within the rule, there is a presumption that you may have a taxable presence in Italy, and you have to reverse basically the presumption.
And how often do you see these? So the reversal of the rule is a very important concept.
To be frank, this rule has been in our legislation for 6 years. We don't see the tax authorities relying very often on this special rule. They prefer just relying on the standard principles about permanent establishment. We still advise clients today in the gaming industry that have problems with PEs in Italy. And mainly the issue is, where are your servers? And is the server at your disposal in Italy? If it is, then you may have a problem. But now, I mean, we also have DST as in the UK, and DST applies whether or not you have a branch in Italy. So this is a tax that doesn't care.
Again, how is the form of the digital tax that you have? Direct, indirect?
Well,
are there thresholds? Because I believe there are thresholds.
Well, the thresholds are slightly different from the UK. So you need to have 750 million consolidated revenues. And you also have to have at least 5.5 million revenues from digital services sourced in Italy. If you meet both thresholds, you are within the scope of the rule of this digital service tax.
How much is the tax?
It's currently 3%, but this is the update. The Italian government, you know, we have a new government since the end of September. They are talking about doubling the rate, so from 3 to 6, because we have apparently a budget gap on other taxes. So this could be an interesting development.
Most of the time we speak about VAT and income tax, but this digital tax, I don't think there's enough awareness about it. So I think it's very important for gaming companies who are operating from Malta and facing Italy, UK, I believe Spain and France. They really take into consideration this digital taxation, especially since there is no double tax relief.
Right. Well, I mean, my position, but this is my personal view, is that it's not so clear that this is not a direct tax.
Okay.
The tax authorities took the position that is an indirect tax, very much the same approach as in the UK. And the main argument is that this is a 3% tax on gross revenues. So it cannot be a tax on income because it's calculated on a gross amount. I think what can be important for the gambling industry is that our tax authorities clarified when this tax might apply to an online gaming company.
Okay.
So if the gaming company just collects bets via an online platform, that's fine. So you're not within the scope of the tax. If the gaming company basically provides a multi-sided digital interface that allows different players to bet against each other, then you are within the scope of the tax.
Interesting distinction.
Yeah.
We'll come back to Italy, but I wanted to speak to Stephen now. Netherlands is new in the licensing of gambling. So last year we started seeing the first gambling licenses coming in. Again, what do Maltese companies facing in Netherlands, what do they need to think about when operating in the Netherlands? I know that you have some distinctions when it comes to VAT. permanent establishment. So what's the take in the Netherlands?
Yeah, so first of all, thank you for having me. I think the main development last year was indeed the approval of the remote gambling bill in the Netherlands, which allows now companies to provide remote gambling through the internet in the Netherlands legally. With that approval of that bill, the government gets a grip on the market of online gambling. And with that grip comes responsibilities by remote gambling providers. So one of the results of this approval of the bill is that the accountability to pay gamble tax actually shifts from the player to the gambling provider, which is gambling tax in the Netherlands is 29.9%. But also, when we're not speaking about tax, get grip on let's say, the responsibility towards a player on addiction and stuff comes with gambling, obviously. So that is, I think, the main reason to approve the remote gambling bill in the Netherlands. I heard some of my colleagues here speaking about digital service tax. Well, we don't have that yet in the Netherlands. Maybe in the future, but that's not a topic yet in the Netherlands. So I think that's a good thing for remote gambling providers in the Netherlands. And when talking about a permanent establishment, well, it's important to distinguish two permanent establishments. We have one for corporate income tax, obviously, but also one for VAT purposes.
And it's important to point out that you can have a PE for income tax, but not for VAT, and vice versa.
Exactly. They are two separate concepts. Yep. They have the same name, but they're two separate concepts. So, first of all, VAT. Well, gambling is a VAT-exempt activity in the Netherlands. So, providing gambling services, you should not pay VAT to the tax authorities on the activities provided. It is interesting to mention that when it comes to the definition of gambling, I think the definition of gambling is that the player must be able to win prizes mainly based on coincidence, which separates two concepts. So we have a game of chance, gambling, and we have, let's say, a game of skill. And one topic in the Netherlands was, okay, then what should we do with poker? Which is, I think, a relevant topic here. And the Netherlands government, the Dutch government mentioned that, okay, poker, let's see what it is. Okay, we see that the chance factor is the predominant factor in this game. So we qualify the game of poker as a gambling game, actually.
And so not a game of skill, and therefore it's still exempt from VAT.
Exactly. Some people say it's a game of skill, but the Dutch government says, okay, it's a game of chance, and therefore gambling tax is also due on poker. But when providing remote gambling services in the Netherlands, I think it's very important to distinguish the game provided here in the Netherlands to determine whether or not gambling tax is due, and maybe VAT. Because if it's not a gamble game, then it's not exempt for VAT, and it should be VAT taxed here in the Netherlands.
Okay, I have to pass on to Marinos because I'm seeing that we're running out of time. So Cyprus, we see lots of, in our gaming structures, we see Cyprus as a holding company or Cyprus as a software holding entity. Now that we have the Unshell directive coming in or proposed, a European 883, a proposal to create substance in terms of holding and software. What is Cyprus doing in this regard? And again, what should gaming companies established in Malta with the Cyprus link, what do they need to keep in mind when operating from Cyprus?
Thank you very much, and thank you for having me as well. So yeah, at the moment, Cyprus is used as part of a holding structure, indeed. And especially with software companies, B2B software companies, taking advantage of the very sought-after IP box, which gives as low as 2.5% tax on royalty income. But yes, indeed, the substance requirement is of increasing importance. the tax office in Cyprus is becoming very cautious of that, especially with the new directives, European directives coming up. And there are specific requirements that a company needs to comply with in order to satisfy the substance requirement, and that is local management and control to be carried out from Cyprus, offices, staff. So these important prerequisites are what the tax man wants to see when examining whether the company satisfies the substance requirement. If this doesn't happen, then the company and the directors, as a result, are becoming more at risk in terms of the company not being able to take advantage of the double tax treaties, dividend income tax-free in Cyprus, which is again another important advantage. So,
in fact, I wanted to ask you, if you're having software companies in Cyprus, it's very important that Cyprus is backed with a very good double taxation treaty network because of royalty income.
Exactly.
So what's your take on this? So in terms of the double taxation treaty network,
the royalty income, which is under the IP box, as I mentioned, is 2.5, as low as 2.5%. There's a specific formula equation for that. But the companies who are doing that, they have to make sure that they have their developers. They have, obviously, they should own the software and develop the software in-house, and they should have their developers, or at least most of their developing team, in Cyprus, based in Cyprus, registered employees, paying the social insurance, payee, and so on and so forth, so that they satisfy the whole picture, which is the substance as well as the IP box. They have to be very cautious on that.
Okay. I think one last quick question. I can't see the time. I'm sorry, I have to get up. Okay. One last quick question for all of us. So, seeing that we're going through a time of recession, are you seeing tax authorities becoming more and more aggressive? And what do you think will be the next steps? So, in terms of substance, in terms of whether there's a PE or not, have you experienced any change in the mentality of the tax authorities?
Certainly in the UK, yes. As I mentioned earlier, obviously the UK needs money, and therefore there is an intensity around the tax authorities collecting tax that has been building for a number of years, and that particularly includes gambling companies. I'm seeing a lot of letters across my desk from the revenue authorities around gambling duty and whether it's being implemented correctly, particularly around bonuses, free plays, playthroughs, and making sure that people have got that right. And again, I mentioned remote gaming duty and general betting duty earlier at 21% and 15% respectively. The rules are very different for those two taxes, and a lot of clients get that confused. And if you get it wrong, you've got to pay the tax, and you've got to pay interest, and you've got to pay penalties. Transfer pricing is the other one, and I think transfer pricing across the globe and tax authorities are looking at everyone's transfer pricing because that's where they can make the most money.
And we have transfer pricing coming in Malta as well. So pleasure to come. Italy, have you seen a change? Are you seeing more and more?
No, I think they are already sufficiently aggressive. I don't think they will. It cannot get even worse.
Netherlands?
So I think historically speaking, the Dutch tax authority is quite flexible and approachable. I believe they're getting a bit more formal nowadays, but then again, they're still really approachable. So most tax advisory firms have close contacts with the Dutch tax authorities and can easily approach a Dutch tax inspector to discuss any topic on taxation, also gambling tax. But whether or not the Dutch tax authorities get more aggressive, no, I wouldn't say so. Just more formal, I suppose.
Okay. And Cyprus?
Similar case in Cyprus. While the taxman is approachable, the tax authorities are becoming more aggressive as well. And I think the key point was mentioned before by our colleague Silvani, that the burden is on the taxpayer and not on the taxman. We have to address the elephant in the room, let's call it like that, and that is the substance requirement. There needs to be an actual business. That's what everybody's looking for.
Okay. I think with that we can wrap up our tax panel. There are lots of tax changes coming in or proposals from the EU. I invite everyone to keep an eye on what's happening in the EU and keep checking on the developments and watch the space. So that's all we have to say. Thank you all for joining me today, and I hope it was an informative panel. Thank you.
Thank you.